Good afternoon, everyone. Welcome to Hit the Bid here on July 25th. Today we're going to be doing a recap of our egg commodities, seeing how these corn and cattle markets fared this week, so let's jump right in. Down below we can see our cattle market saw steady gains all week as both these feeders and fats continue to push up into new all-time highs. We do have our October live cattle here on the board to start us off. We did see a rollover this week into this October contract from August as that volume started rolling out of August late last week, and this will be the new front month contract going forward and the focus from here on out. So let's jump right in. This October contract jumped out to a hot start early this week, opening up on Monday and seeing a push right there above our bull pivot there on 220.80, showing a nice strong close here above those prior week's highs on Monday, and then just continued upside into Wednesday's all-time high there at 223.90. We did see this market give back a little bit of those gains on Thursday, but nice recovery efforts here today as the bulls managed to push this thing back up. Closing the week up here at 223.25, just off those all-time highs, but a nice strong finish here for the bulls this week as they continue to prove the strength of this market. We expect to see this upside continue as this big picture uptrend remains intact, as well as this intraday time frame as well. We continue to see higher highs and higher lows here as this market keeps on climbing up into new all-time highs. We have yet to get a daily close here below a prior day's low in nearly a month, so this market just keeps on grinding here and no real signs of concern at the moment. We do see these prices up here at these overextended levels. This market's getting a little bit overbought at the moment, but strong, healthy markets can always see more overbought conditions, so we expect to see that upside continue. Do just want to be aware here that we are about 3.5 standard deviations away from that 50-day moving average as this market shows it's a little bit extended here. However, most of these significant pullbacks over this last uptrend or this uptrend we've been in for the last 4 months have come from the 4 or 5 deviations away from that 50-day average. So we still have potential for more upside here and see if this fat cattle market can push up into the 230s. If we do get a break here above this all-time high at 223.90 as we head into next week, we could see this thing break out of the top end of this uptrend channel and really see this thing start to go vertical. At the moment, we are just seeing nice low volatility grind here up against the top end of this channel, and we expect to see that continue until we can get a close below a prior day's low. But until then, expect to see this market just to continue drifting higher. But we just do want to be cautious of pullbacks from here on out. In the event of a pullback over the next week or so here, we do expect to see plenty of support step in. We do have this rising 20 and 50-day moving average at the near 213 and 218, so these are good levels that we'll expect to see support step in, and we'll have to wait and see how the market reacts if it gets down to those levels. But in the meantime, this uptrend is rolling, and we don't really see any signs of it slowing down until we can get a close below a prior day low. So expect to see the upside continue across this fat cattle market. Go down the line into some of these back contract months as well. Each of these markets continuing to climb, and all the way out into those early spring contract months as well, showing the strength of this market, and we expect to see this upside continue throughout the summer and into the fall. Let's jump over to the feeders now. This feeder market continues to show its strength as well. Bulls keep on running here, and we did have a nice breakout this week, pushing above this prior 7 or 8 days here. We spent trading in about an $8 range here between the 9th of July and the breakout on Monday. We did see this market push above that bull pivot there at 326 Monday, showing that close above that prior week's high, and a nice push up into this new all-time high here at 332.07. This feeder market continues to show its strength and resilience here as these bulls keep on pushing. We expect to see this upside continue in this feeder market as well. At the moment, we did see a nice breakout above it and support this week in this 326 to 327 area near these lows, and a nice strong close here on Friday, just shy of 332, just off of those all-time highs. If we get early bids above 332 next week, we could see this thing start to go vertical as well, as it has poked out above the top end of this trend channel line. Could see this thing really start to rally up into the 340 area or beyond. This market remains hot and strong, so expect to see that upside continue as all time frames continue to show a nice strong uptrend. Like the fat cattle market, this feeder market is also a bit on the extended side, being a little over 4 deviations away from that 50-day moving average, so we do want to just be cautious of potential pullbacks. But until we get a close below the prior day low, we aren't really concerned about that and expect to see this market continue to drift higher. We can go down the line here and see this market continues to push up out into these back contract months as well. We did see these fall contract months putting in new all-time highs here, just right around the close here today, showing the strength of this feeder market for this fall. September, October, and November contracts all putting in new all-time highs here today. We did see the early 2026 months lagging a little bit, only being up between about $1.50 and $2.50 here, all the way out into those April feeder contracts for 2026. But still good upside across the board and out into those back months as well. As this market continues to rally, expect to see these higher prices continue throughout the summer and into the fall. Last but not least, we got our December corn futures here. We did have a nice steady week of downside. Early breakdowns on Monday pushing lower after last week's push up into this gap that we created back off the 6th, 7th Sunday night open here, where we broke down between this 430 and 433 level. Nice resistance up there at that gap on Friday, pushing back off of it. And then this week we just had this market open and push lower early. Nice little consolidation over the last 3 days, putting in this weekly low at 415.75 and showing some nice balance action here between 416 and 421 over the last 3 days here as prices just taking a breather and getting comfortable in this area at the moment. We still have this big picture downtrend intact, and we expect to see these corn prices continue to get cheaper here in the near term. As we head into next week, we need to see a breakdown below these today's low as well as the week's low here at 415.75. Once we start seeing offers roll in below these levels, we'll see this December contract push down here into new contract lows and potentially down towards that $4 mark as these grain prices are expected to keep getting cheaper. That's all we got for today. Everyone have a good weekend. We'll catch you next week.